Hello everyone, this is Ankur Chaudhary from Hitbullseye.com, and in this lecture I'll be talking to you about the banking sector in India. First, let us try and understand what banking is all about. So banking can be defined as the business activity of accepting and safeguarding the money owned by other individuals and entities and then lending out this money in order to earn a profit. So this is a very basic definition, but one thing that you have to always keep in mind that banks are in the market to earn a profit. Now let us try and understand how these banks earn this profit. So there are savers in any economy. These savers include individuals, companies and the government itself. Right? They deposit their money into different banks. Right? And banks are giving out this money to borrowers. Right? And the borrowers also include the same set of people that are the savers. So individuals, companies and the government borrows from the banks. Now banks have to pay this money back to the savers with some interests. Also, borrowers pay back the banks the principal plus interest. Right? But there is a difference between the interest paid by the borrowers to the banks and the banks to the savers. So this interest is always greater for borrowers as compared to savers, right? So the difference, due to the difference between these two interest rates, banks make a profit, which is also known as spread. So now that we understand how banks make money, let us take a look at the primary and secondary functions of banks. Primary functions, the broad heads are accepting deposits and granting loans and advances. Right? So these are the different accounts which we'll be talking about in detail in subsequent slides. Right? And then there are cash credit, bank overdraft, loans, bill discounting, etc. Right? So these are various instruments or various functions that the banks are performing. Now let us look at the secondary functions of banks. First are of course agency functions, then the utility functions. So various functions under agency function are funds transfer, check collection, periodic payment collection, portfolio management and some other miscellaneous functions as well. As far as utility functions are concerned, we have issue of drafts, locker, underwriting of shares, foreign exchange, forming or developing project reports, and various social welfare programs as instructed by the Reserve Bank of India or the Government of India. Now all these functions are important. You have to basically understand what they are all about, and these are important as far as your paper is concerned. Now let us look at the various different types of accounts that can be opened in any bank in India. First and very popular one is the savings bank account. Right? As the name suggests, the main objective is to promote savings. So as far as saving bank account is concerned, there is no restriction on the number and amount of deposits that you make in this account. So you can put in any amount of money any number of times in this account and you will not be charged for that. However, there are limitations as far as withdrawal are concerned. So technically speaking, any bank can limit the number of withdrawals that you can make in the saving bank account. But in India, hardly any bank does so because of very high level of competition in the banking industry. Next, no loan facilities is provided against a saving account. A special type of saving bank account is a no frills account. So in this account, you will not be charged anything by the bank for opening such an account. However, you will not be getting basic facilities like maybe net banking, debit card, credit card, etc. Right? So there are no frills attached in this particular type of saving bank account. Next type of bank account is the current account. It is most liquid account as there is no limit on the number of transactions. So you can amount any amount of money for any number of times, and also you can withdraw this money any number of times without any restrictions, right? However, there is a penalty charged if minimum balance is not maintained in such an account, right? So there is a minimum balance account that you have to keep in this particular account, right? Generally speaking, banks do not pay any interest on the current account. However, in today's market scenario of very high level of competition, some banks have started paying some minimal interest or nominal interest on current account as well, right? And banks charge a fee for current accounts, right? So current account is most suitable for, the answer is businessmen. This is so because businessmen would want to deposit a lot of money, a large number of times, perhaps every single day at the end of the day, and also would want to continuously keep withdrawing money from the account. So that is why they prefer current accounts generally. Next type of account is a very famous one, of course, is the fixed deposit or FD account. The amount in this particular type of account can be deposited only once, right? Premature withdrawal is allowed in some banks without penalty. However, certain other banks charge a penalty for premature withdrawal of an FD. This account is very significant because customers can avail loans against FDs up to 80 to 90% of the value of deposits. So how a FD functions, I'm sure most of you will be knowing, but you deposit the money once in an account for a maturity period of, let us say, 5 to 10 years, right? And after that, you can withdraw this amount, which will include your principal as well as interest as well, right? Next type of account is the recurring deposit account. So in this particular account, you have to make a deposit after a fixed interval of time. So let us say you put in 1000 rupees every month or 4000 rupees every quarter, right? The interest rate that you earn on a recurring deposit account is the same as fixed deposit account, right? So either you can have a fixed installment, that is 1000 rupees per month, or you can have variable installments as well. So one month you put in 1000, next month you put in 2000, and so on and so forth, right? However, no withdrawals are allowed, but some banks do allow closure of the account before the maturity period. These banks generally charge a penalty rate for closing such an account. So during the course of this video presentation, we saw what banking is all about. Secondly, how banks earn money. Thirdly, we understood the primary and secondary functions of banks. And lastly, we spoke about 4 very important types of accounts as far as banking is concerned. Thank you very much.